Hello, my name is Loredana SCHİPOR, and I want to present the paper entitled The Consumer Acceptance of the Digital Banking Services in Romania, an Empirical Investigation, which was elaborated in cooperation with Associate Professor Cristina. The present context generated by the COVID-19 pandemic has profoundly changed the banking sector, adding new features to the existing financial offer for the people forced to adapt to the digital area. The health crisis has amplified the digitization trend for both consumers and financial institutions, focusing more on the financial counseling process in a way to find complex solutions to the current needs. The remote work determined many of the repetitive activities to be included in the chatbot systems to improve a safe consumer experience. At the onset of the COVID-19 crisis, the Romanian banking sector was on solid ground compared to the EU average in terms of capital adequacy, liquidity, and provision of non-performing exposures. At the end of 2019, the average level of non-performing loans was 7.2% in the Central and Eastern European countries, while the Romanian indicator was on a decreasing trajectory during the period 2014-2019 up to 4.1%. The constant concern to maintain the quality of the loan portfolio was translated into a reduced level of NPL at the end of the year 2020, which was the minimum of the last decade. However, the NPL rate returned to growth in January 2021, rising to 3.9%, being influenced by sectoral trends such as hospitality, transport, or logistics. The structure of the Romanian banking sector was dominated by the same economic entities, the most significant change being related to the reverse order between Raiffeisen Bank and Unicredit Bank. Transylvania Bank has taken a considerable advance over BCR, the two credit institutions being now separated by almost 22 billion RON. On the other hand, from the top 5 banks by net profit, only BCR has obtained an increase of the value achieved in 2019. The total portfolio of net loans granted to the BCR customers increased by 7.4% in 2020, being supported by both retail and corporate segments. BCR reported 1.8 million users of internet banking and mobile banking, of which over 1 million active users for George increasing by 43% compared to 2019. Almost 15 current banking products are available in the George app, from money transfers, payments of bill, 100% online credit card, 100% online overdraft or insurance. In 6 months since its introduction, over 2.4 million appointments have been made through the access system in branches based on programming, which means approximately 20,000 per day on average. In this context, the real digitization of the banking system must be sustained by digital skills and the integration of digital technology by enterprises. According to the Digital Economy and Society Index 2020, Romania ranks 26th out of 28 EU member states included in the ranking and performs best on the connectivity dimension. The human capital overall score was below the EU average, while 31% of the individuals have at least basic digital skills. However, the COVID-19 pandemic has changed the consumer's behavior, an ING study suggesting that 43% of Romanians prefer to have access to as many payment options as possible, although they do not actively use them all. Cash payments are still at the top of Romanians' preferences. The data provided by Statista before COVID-19 outbreak in Romania, 45% of the respondents used cash, while after the health crisis only 21% of them use it. The Romanian credit institutions need to upgrade through strong digital foundations to anticipate the consumer's needs and increase the user experience for further growth of the sector. In the literature review section, Davies suggests that the consumer intention to use new technology is mainly determined by the ease of use and its perceived usefulness, while other scholars argue that the comfort cannot be the only reason for rising acceptance of new technologies in the financial sector. Bike et al. Suggests that during the COVID-19 crisis, 58% of the respondents have never visited their physical locations of their bank, while almost 26% of them visited their bank only once a month. Starting from the literature review regarding different determinants for consumer behavior related to digital banking services, we developed a questionnaire based on open questions, closed response questions, multiple choices, or a 5-point Likert scale. Due to the strong affinity of younger people for digital innovations, we have focused on students with both economic and non-economic backgrounds as the main propagator of financial innovation. 3 research hypotheses were tested using the SPSS software. First, there is no correlation between price and the intention to switch to a fintech company. Second, the perceived accessibility features of the financial services have a positive influence on consumer acceptance of digital banking. And finally, there is a strong correlation between financial knowledge and the attitude towards digital. And here is the descriptive analysis of the sample. The comparative study regarding the consumer acceptance of the digital banking services and fintech services reveals that 92.5% of the respondents were digital banking adopters and 7.62% of them were non-adopters, while for the fintech adoption the figures are lower with only 21 of them fintech adopters and 79 non-adopters. The first hypothesis, the price influence is not the primary determinant of the intention to switch to a fintech company. The descriptive statistics suggest that 79% of the respondents are not currently using fintech services, while only 21% of students have already used them. According to the frequency analysis, most of the respondents have mentioned the quality of the services to explain a possible switch from traditional banks to the fintech companies, while the price is still important for a significant number of customers. The price role as the major determinant for switching from banks to fintech is no longer valid, emphasizing a more sophisticated customer that can find a balanced ratio between the most significant features of a financial product. The main findings suggest the evolving role of the financial technology for the new generation beyond the rational cost-centric determinants. The results suggest a more elastic attitude towards price in favor of quality, speed, and ease of use. The second hypothesis, perceived accessibility features of the financial services have a positive influence on consumer acceptance of digital banking. A Pearson correlation coefficient was used to test the relationship between satisfaction with the bank and the three variables: information sufficiency of digital banking services for the current needs, clarity in the online information provided by the bank, and digital banking ease of use. The test results revealed a positive correlation between these variables with medium intensities. The final hypothesis: there is a positive correlation between financial knowledge and the attitude towards fintech companies. A Pearson correlation coefficient was used to test the relationship between financial knowledge and the trust in fintech. The test results revealed a slight correlation between the two variables. There is a positive effect of financial knowledge on fintech adoption as the next step in the evolutionary dynamics of the sector. Thus, individuals that can understand the financial products better express less fintech reluctance, developing a greater affinities for these companies. On the other hand, there is a weak correlation between the digital banking users and the fintech user. A Pearson correlation coefficient was used to test this relationship, outlining a positive correlation. Clients which are already using digital banking services are more determined to increase their financial activity by using the services provided by a fintech company. However, these two entities are connected through a cooperation link rather than a competitive relations. The current phase suggests that they are not excluding each other, fintech companies playing an enhancer role for the whole financial industry. The paper outlines the significant influence of trust, transparency, and financial expertise to explain the decision to stay or switch from traditional banks to fintech, while the price does not appear to influence the switching probability. Three research hypotheses were tested, revealing no correlation between price and the intention to switch to a fintech company, a positive influence of perceived accessibility features of financial services on consumer acceptance of digital banking, and a positive correlation between the financial knowledge and the attitude towards digital banking. Related to digital banking, we have found median correlations between the satisfaction with the bank's digital offer on the one hand and the information sufficiency, clarity, and ease of use on the other hand. The descriptive statistics suggest the major role of quality among the most mentioned features of fintech, emphasizing a more sophisticated client, which sets its goal beyond the rational cost-centric determinants. The fintech users are the most sophisticated customers, which have already depicted the digital banking offer, requiring redesigned strategic positions based on innovations. The main results suggest that there is a slight correlation between financial knowledge and trust in fintech, the economic background creating the premises for activating an innovation circle: financial knowledge, digital banking users, and fintech user. Financial knowledge can be a strong differentiator in the financial market, providing the necessary tools to compare the products and engaging the customer in a more transparent relationship with the bank or the fintech company. Thank you very much for your attention. This was our presentation.